1307. Tushar Pradhan is with us, director at HXGON Partners. Tushar, good to have you with us here. Thanks for your time. Good to have you here. Quick word, Tushar, on markets which are selling off. Another 300 points, just under 24,000. How much more in your opinion? I think you'll have to unmute yourself, Tushar.
Sorry. That question is an amazing one because if I knew the answer, it would have made me very rich. So there is really no way to predict.
Not necessarily, Tushar. You can have all the answers, but making money is. But anyway, I mean, because are we in the? So earnings certainly are coming off a little bit. You'd agree, but as it often happens when you're going through a market correction, you always wonder, right? I mean, is this a slightly bigger one? Have the markets on the upside overdone it? Those are natural questions to ponder. So just wanted your thoughts there.
Yeah, nice to make that context a little bit wider because I think we need to answer that in a wider context. The biggest happening which is going to come upon us is, of course, the US elections. Now, you would argue that what has Indian markets got to do with it? But I think we're all interrelated here. And I think this is a major one, at least from a news perspective. 2-3 things really come to mind because of that is that the US markets are likely to react in very different ways to either of the candidates coming to power. Now, that leads to a lot of uncertainty. And I think that uncertainty is something which is playing into the markets right now, even our markets, because people are unwilling to take a bet because of the direction in which markets are likely to go after the verdict is out. Because as we know that both of these candidates have very distinctive economic agenda, and that will lead to a different set of outcomes for most of the companies that we trade in. And as a result, globally, that will have a big impact on earnings per se, as well as where the economy in the US goes and then eventually the global economy. So I think that's a big overhang that I think our markets may be just feeling a little tense about. If you look at the fundamentals, and as you mentioned, earnings have been a little soft. I won't think it has been a little soft. I think it's been a little bit less than expected given where the market valuations are. So we've seen companies which have been delivering in line with what their expectations are, yet they underperform. And I think this is something to do with the market sentiment rather than the fundamentals alone. So I think from an India perspective, the earnings situation continues to remain very strong. We just ran a couple of screens and we find it very difficult to find any company which has had a significant drop in quarterly earnings in the last 2 or 3 quarters. So it does show you that there has been tremendous earnings momentum. And this kind of momentum doesn't come to a halt suddenly. So I think there are 2 issues to concern us. One is what will be the sentiment going forward and where are the fundamentals? And I think if the sentiment worsens, then even if you have good fundamentals, it doesn't hold up too much. So it's more to do with the near term rather than any lasting impact, I think. That's the view I have now.
Hi, Tushar. Good afternoon. Good to see you. And so what would your strategy be then? We have big events. The markets have run up considerably. Earnings misses could be relatively less. But at these valuations, they count, right? And they hurt. So what would your asset allocation strategy be?
Well, if it is purely equities, then of course, we don't have any option to leave equities as an asset class. But overall, if you were to look at an institutional portfolio and say, look, I want to position, a portfolio which is largely liquid and designed for relative performance over the next 1 or 2 years, I think the asset allocation could definitely look at a little bit of debt, because I think the uncertainty and the volatility is not going to go away in the next few quarters at least. And as a result of which the overvaluation could lead to some sort of profit taking and a sort of stowing away, I would think, some of the gains into fixed income for a while. But I'm not suggesting a switch out of the asset class. I'm just saying that at the margin, I think there could be a reason to kind of revisit the allocation there. From an equity alone perspective, I think that is really where the rubber hits the road, and we now need to distinguish between companies which have run up on the basis of sentiment or popularity or I would think, the sector having done well and everybody benefiting out of that, as opposed to companies bottom up who actually will be able to deliver their promise. And I think there is a very, very hard look that needs to be taken in terms of which companies will deliver on the promise on the fundamental side and which ones are likely to, kind of fall away if the sentiment remains pretty negative sometime. So I think the review in equity portfolios have to be done really from a bottom-up perspective and to kind of reassess the risk that anyone has taken. Of course, the fact is many equity portfolios also contain a speculative element. They also contain a sort of, I would say, defensive element. And I think this is the time to improve the defensive element in any portfolio.
Okay, all right, Tushar, appreciate you stopping by. A short but sweet conversation today. We look forward to chatting with you in the coming weeks as well.
For more news and updates, all you need to do is follow CNBC TV18 on all of our digital platforms.